This is the Agoro Carbon Farming Podcast. Agoro Carbon Alliance is taking action on a global scale to reverse the effects of climate change by decarbonizing farming and restoring carbon to the world's soil. On this podcast, we're going to explore carbon farming from the soil to the atmosphere and how it affects everyone in between. To learn more, visit us at agorocarbonalliance.com. Thanks for joining another edition of the Carbon Farming Podcast. In our first episode, we kind of talked about the terms of the carbon marketplace and understood a little bit more at kind of a beginning introduction to the carbon marketplace with our leaders of Agoro Carbon Alliance. Then we moved on to talking with a grower, somebody that's actually signed up with Agoro, and his perspectives on how this whole process works. And then we talked to a couple of our Agoro Carbon Alliance sales agronomists and some of the questions that they get asked and how this can be a profitable value for a farm or a ranch. And today we're going to look at a different segment of the value chain. We're actually going to go up the value chain and talk about the buyers and users of these carbon credits. Today, we're going to be talking with Ariel Perez. He's a partner at Hartree Partners and the head of environmental products. Ariel, tell us a little bit about you and especially what does Hartree Partners do?
Sure. It's great to be with you, Scott. Yeah, so the essence of what Hartree does is it participates across energy and commodity markets. We are participating as principal, so we manage and deploy our own capital into a range of different assets, different value streams. And today we have a presence, I would say, in most major energy commodities. In the carbon side, we have an integrated business model where we invest into projects, we partner with developers, we work with customers that are themselves end users and consumers of carbon who buy to retire, and then all the various different services that are required to get carbon from the ground into a registry, distributed to customers, and for everybody to then, be able to report that accurately is a relatively complex thing. And Hartree we've been in the market for a few years, both in analyzing these markets from a proprietary perspective and, really kind of understanding the fundamental fair value of these different markets, to trading ourselves as principal, to working with customers that have exposures on one side, and then obviously, growers and ranchers who are producers of carbon assets and want to participate in the market, by supplying. So we are a diversified global commodity merchant. We're a private company, and we're headquartered in New York and have offices around the world. So it's a little bit about what we do.
Ariel, I'm going to put on my hat and let's pretend that I own a very large business and I have some sustainability goals and I want to do my best for the environment and for my customer base and lower my carbon footprint. And I've come to Hartree Partners. I've heard about Hartree and I finally get introduced to you. What do you help me do? How do you help me do it?
It's a good question. So we have a business which is called Vertree, which started a few years ago, which is really our voluntary and physical carbon markets platform. And what Vertree does is first and foremost, it uses a lot of our analytics that we use for compliance and voluntary carbon markets to help customers kind of navigate what their transition pathway looks like today, as well as how that's likely to evolve over time. And what I mean by that is every single company in the world within their respective sectors and around the geographies in which they are active will have a different marginal abatement cost curve. And what that means is they have a different range and mix of technologies and activities that can reduce their carbon footprint. And invariably, the more carbon you need to reduce, the higher the marginal cost has to be. So what we typically start with is working with companies to understand if they have price or if they have volume or quality requirements. So when a company says, we want to be net zero and get our emissions exposure down to zero, that's going to come at a different cost depending on what industry you're in. In transport, it's extremely expensive and you can't actually get to zero. If you're a corporate that is just buying electricity, essentially, you can essentially get that to zero through buying a PPA. If you're running a massive industrial supply chain, then the reality is it's not in your control, how much you get your emissions down because you're part of a very complex supply chain that go across different borders. So the first thing is really understanding what is in the money today relative to a carbon price or an internal carbon price. That's what we call kind of the low-hanging fruit, which frankly should be invested into immediately. There are opportunities that are at a negative cost. So those are things like energy efficiency, switching to renewables, in a region where you have high thermal costs for electricity generation. And frankly, some things in the nature-based space as well, once you start taking into account different co-benefits, we think it kind of pays for itself. So in other words, it has a negative cost. As you go up the marginal abatement cost curve, you'll get an increasing amount of emission reductions, but you hit a limit, either because the company can't pass on enough costs to compensate, and then they'll have negative margins, which is kind of against, what most private or commercial enterprises are in the business of doing, obviously. And then once we identify at different points in time how many emissions can be abated with the available technology, the balance is really kind of what forms the basis of a portfolio for offsets, which need to be procured, risk managed, and rebalanced over time. So what Hartree does is it works with customers starting at setting realistic goals, putting in place implementation plans, whatever cannot be abated today or frankly in the future using our forecasts. That's what we then work with them to procure, to build, and to supply offsets that we are investing into and generating ourselves on our balance sheet. So it really is meant to be an end-to-end solution for customers that have ambitious decarbonization goals and would see a benefit in partnering with an organization like ours that is, investing very early stage directly at the project level and really able to finance, warehouse, and manage risk on their behalf, and then help them create kind of tailored, bespoke portfolios that have the flexibility to evolve over time.
Very good explanation. And if I understand it properly, so there's a multi-pronged approach that Hartree helps implement depending on the specific business that you're working with. Those include reducing emissions or changing practices that help reduce emissions. And then there's the cream at the end where there's so much that you can do, but then you buy an offset or a carbon credit to get you to the final net zero. Is that accurate?
Yeah, I think, look, things like carbon neutrality and net zero, these claims are obviously, we're kind of making up the rules as we go along. Mm-hmm. The overarching principle here is that there needs to be a compensation for emissions and for a negative environmental externality that is potentially unavoidable. So whether that is to satisfy a regulatory requirement, whether it's for a company to be able to label a product as carbon neutral, or whether it's to meet a shareholder initiative to reach net zero, the concept is that there are massive differences in the marginal costs and the efficacy in reducing and removing carbon, across borders, right? And frankly, over time. So trading with one another lowers the overall cost of reducing and removing carbon. And at the end of the day, what that does is it increases our chances of staying under, call it a 2-degree, temperature scenario, because there is a finite amount of resource that can go into these different projects and technologies. So it's all about efficiency. It's about being able to transact different environmental services, between two different parties. And whether a company is going kind of overweight on offsets at the outset because they have a view on technology and they want to basically try to optimize over time, or whether you're, taking the opposite view, essentially, where you say, look, we're only going to use offsets for the last mile and we're going to put all of our eggs in the technology basket today. The point is that it's a very important and, in our perspective, kind of unavoidable piece of the toolkit that we've got at our disposal.
So how did you get involved with Agoro Carbon Alliance in acquiring these carbon offsets?
Yeah, good question. So, if you take a step back and you start counting carbon, much the same way that, the energy industry, they count barrels or they count tons and molecules that move around, we, for a long time in my career, I've we've been counting the carbon and understanding and mapping, what different sectors emit, where in the world the carbon is regulated, where it's not regulated. And where we got to is, somewhere around 20-25% of the world's carbon is regulated and priced directly, which means that 75% roughly is not priced directly or regulated. So from our perspective, the same way that we are mapping out and we're analyzing how a economy like Germany or in South Korea or in California, how they're going to be able to balance kind of the domestic carbon budget within these trading systems, we've done something very similar at a global level. And literally, it's just mapping out all of the opportunities that we have at our disposal to reduce and remove carbon. And if you do that exercise, you'll notice that nature-based solutions are at the very bottom left-hand side of the cost curve, meaning that they're very cost-advantaged, they're extremely scalable. And if you start taking into account the various co-benefits that you get from conserving, restoring, and regenerating nature, it makes them a very attractive investment option and kind of a very promising intervention to get immediate and long-term emission reductions and removals. So obviously, Agoro and their relationship that they had with Yara is a major player in the agricultural space and producing fertilizers, which are key for just about everybody on the planet to be able to feed ourselves, an increasing population at reasonable costs. Fertilizer companies, by and large, use natural gas and other energy commodities as a feedstock. They're in a regulated market. They've got a big compliance carbon position and obligation. But what really attracted us to Agoro is how they were thinking about this as a value add, as a service that they can provide to their relationships kind of downstream to them. So farmers, ag input companies who are day in and day out working with farmers and ranchers and trying to think about, how they can maximize the return on their land. It seemed like just an excellent partnership opportunity for us to really apply the skill set and the relationships we've got on the carbon side with really a player that's got, really kind of unparalleled relationships. And if you bring all of those things together between, where Yara is sitting, what it wanted to do and is successfully now, kind of built with Agoro, and the necessity for Agoro and their relationships on the ground to be able to access finance, build large portfolios, manage those carbon risks, going forward, both over the counter with customers directly and, on the kind of the growing exchange market. It's kind of a perfect partnership because we both do what we're good at. And if we're successful, we will be able to create an additional revenue stream that diversifies, right? That diversifies and strengthens, the livelihoods, frankly, and the revenue streams for people, who are on the front lines, growing food and taking care of the land on which we all depend. So that's the background.
Ariel, why, with the diverse portfolio of tools that you have in your tool belt and the different areas that you can buy carbon offsets, why are you interested in agricultural carbon offsets?
Yeah, good question. First of all, it's a market that's completely unaddressed. So the vast majority of farmers have no idea what their farm is worth from an environmental perspective. And that's not their fault. That's simply because, first of all, agriculture is outside of the scope of virtually every trading system. Forestry and land use is outside of the scope of every regulated carbon market in the world, to the best of my knowledge. The only market in which normal individuals and companies can participate is on the voluntary carbon market, because in compliance markets, the government issues all of the credits. So in the voluntary carbon market, we haven't had prices that would make it worthwhile for an Agoro or a Hartree or any of these other service providers to really go and try to aggregate farms and create projects historically. So it's typically been something that has been really exclusively available for very, very large projects with hundreds of thousands of hectares that are able to kind of avoid emissions at an extremely low cost. Those aren't typically characteristics that you'd see in an agricultural project. So if you think about, the different kinds of environmental services that the agricultural sector can provide, it can obviously remove carbon through regeneration and just through photosynthesis every single year. If you choose to not harvest, or if you delay a harvest, or if you're doing agroforestry, for example, that can end up in a let's call it a short, medium to potentially long-term form of carbon removal. Those are ecosystem services that I think are going to increase in value. I think as transparency increases, you will see customers increasingly paying for permanence on the carbon removal side. And then there's obvious co-benefits, right? Farmers today essentially make money by, buying inputs, selling crops, and hopefully making a margin. If we can be successful in, giving them an offer and being able to diversify, their existing plots of land to be able to participate in this growing carbon market, then it just adds value. It just increases the pie for everybody. For our customers, it gives them an increased diverse pool of offsets that they can support and invest into and rely on, so that they're not so exposed to things like forest fires and floods and different kinds of pests and things like that, wiping out different projects in specific regions when it gets quite concentrated. And then I think the last bit that I would say about agriculture is, most of the land on this planet is basically used for agriculture, or agroforestry. So it's just about the biggest potential market in terms of coverage that exists. And from our view, if done properly, it reduces the inflationary pressure that we'll see in compliance carbon markets, involuntary carbon markets, which ultimately feeds through to every person on this planet through inflationary pressures. So it's essential that we get this right and that we help scale.
I'm going to back up a little bit and again put on my business owner hat with my goal of lowering my carbon footprint. If I come to Vertree and say, you know what, I really think this is important and I want to lower my carbon footprint, but I don't want to change any of my operational aspects, can I just buy a whole bunch of carbon credits and get me where I need to go? Do you get that argument or get that question from some of the companies you work with? They don't want to change?
Well, less and less. I mean, the reality is the social license to operate, for really any commercial enterprise that wants to have any meaningful relationships with with anybody outside of their very small circle of relationships is going to have to make an effort, right? And what I would say is companies who take that view are usually companies that haven't actually gone through the steps of doing their due diligence, mapping out their different abatement options, working with their banks and their lending institutions to see where they can get some support to finance some of these investments or changes in activities. So I would say, in the very beginning of when we started, and probably, candidly before the carbon market was reformed and really repriced from, call it 5 to over 75 euros a ton, it was like companies just wanted to do the minimum to be compliant from a regulatory standpoint. And I think a lot of companies that have made pledges really did so without really running the numbers and crunching the numbers and understanding what that would mean on their business. But right now it's, we don't really work with companies that just want to buy offsets to just get rid of the problem. At a very minimum, they'll need to understand what is in the money relative to an internal carbon price. They'll need to have a transition roadmap. And there's certain sectors, as I said, where there are no good abatement options. So even if they wanted to reduce 50%, for example, it's not possible.
Right.
We understand that. So we're here to help kind of make sense and put numbers to this issue and to really kind of help on the implementation side. That's kind of our role in this.
I'm curious, what category of companies are approaching you? What types of companies are the ones that you're working with right now? Is it across the board, or are there some companies in the food sector or the transportation sector? Who do you work with?
It's really across the board. If you did kind of a global weighting of the biggest emitters and in terms of scope 1, 2, and 3, those are all companies that we're deeply engaged with. I think what is surprising to us is how much interest we're seeing from kind of the financial and the investment sector. So these are universal asset owners and institutional investors that ultimately own, big equity stakes in these polluting companies. And the feeling we get is that they're interested in hedging, just in case, companies kind of at the executive level can't transition quick enough. They're looking to do kind of increasingly, invest into projects, have exposure to this sector and just kind of do a bit of portfolio hedging, if that makes sense, kind of as an overlay. But yeah, it really is diversified across the board.
Ariel, I found out before we hit the record button that you've been in this carbon marketplace for 13 years now. I have a shelf over here that I have many different hats, and I'm going to take off my business hat and I'm going to put on my rancher and farmer hat.
Okay.
And as I'm listening to this podcast, I'm going, okay, carbon marketplace. Is this a flash in the pan? You've been working in it and for 13 years. Where do you see this going in the next 10 years? Should I, as a farmer that's listening to this, should I get involved in this, or is it going to go away? What's your prediction?
It's not going to go away. I mean, if it goes away, we have major problems. What I think is important for me to say is, I think the word voluntary in the voluntary carbon market is, it gives people, I think, a false sense of a market being optional. Voluntary is not really kind of optional in this case. And I think the reason for that is that the companies that are in the market today, building teams, building portfolios, starting to buy offsets, investing in these projects, are doing so to meet voluntary self-imposed targets. And if you look at what the SEC is doing around climate disclosures, if you look in Australia, how they're holding companies, to account for, public statements they've made and pledges, the companies can't lobby themselves out of their own self-imposed targets. That doesn't really make any sense. So, what I can say is over the next 10 years, if you just think about companies that have already made pledges, and you do the math in terms of where their emissions are today and where they need to go, we think this market should scale 10 to 15 times just based off what's already out there in the public domain.
Wow.
With public companies. And, by definition, we need everybody to kind of pull their weight and contribute both on the supply side, companies to follow through and, actually commit to buy and put money on the table, which is, part of what we're here for, to structure these kind of long-term offtakes and give farmers security in terms of having a customer. But without a doubt, even if a farmer doesn't want to sign a contract and create a carbon project and commit to following through on the interventions, they need to at least know what those additional revenue streams are worth. They need to understand what the drivers for creating a carbon offset and what is the difference between a low, a medium, and a high quality offset, and what difference is it in price. So if the price does double, right, they've got already a playbook. They know what they need to do if they want to basically, start farming carbon as opposed to farming some other food crop. And that really is, going forward, in my opinion, the fundamental question that farmers are increasingly going to need to answer beyond, what crop do I plant, or, how much do I decrease fertilizer use, or do I, defer a harvest, or do I till here, do I not? The additional revenue stream that every single farmer in the world will have is an environmental service revenue stream, which today is incredibly difficult to value, and it's almost impossible to lock in. So I can guarantee that over the next 10 years, the ability to lock in long-term pricing, the ability to borrow, from banks and from other lending institutions to be able to invest into those interventions will increase. And we're relatively confident that the price will also increase because there's a significant imbalance where you have a lot more demand than you have supply. But this is a major topic for virtually every corporate in the world. And, I think agricultural soil carbon can represent a major supply source of relatively low cost, high quality carbon, which is going to compete with some of those more expensive technological solutions. It's optionality that people have, and it would be absolutely in their interest to, at a very minimum, understand, how that changes over time and start forming relationships with, hopefully with people like, companies like Agoro and ourselves at Hartree, and just being ready to act when the time is right for them.
Let's talk about urgency in this evolution. If I'm a grower and I'm saying, yeah, maybe I'm interested here, is there some urgency for them to get involved sooner than later?
Yeah, I mean, I think there is, because look, it's like any market. The carbon market is going to go up, it's going to go down. Food prices and agricultural prices are going to go up, they're going to go down. So the sooner you get a handle on this new market and the interplay between carbon versus traditional revenues, the faster you're going to have an edge on some of your competitors. I also think that in particular for large farms, there's really opportunities to expand. There's opportunities to really be on the cutting edge of using technology and working with your lenders, because they all, of course, are out there looking for partners on the ground who want to borrow and want to implement new solutions. And being at the forefront of that typically means you can get pretty good incentives and and a bit of a leg up on your competition. But yeah, the market is here to stay from our perspective. Having these partnerships in place is really key for when the market does kind of go in your favor and you want to take action, because these projects do take time to get off the ground.
Is there anything that we haven't touched on that you think some of our listeners, farmers, ranchers, their advisors, the retail, that you think they should know before we finish up here?
A lot of talk of, the carbon market has, over the years, it's kind of been like a liability and a cost and a risk to businesses with kind of for obvious reasons.
Right.
And I think the key here is, agriculture kind of encapsulates this dynamic perfectly. Fertilizer costs are linked to kind of indirectly linked to the price of carbon, right? Particularly in regions where carbon is regulated, but it also provides an opportunity. So we spent most of the time talking today about the opportunity to generate carbon offsets or removal units by putting in place different interventions to, create carbon offsets and sell those into the market, either in the spot or on the forward market or through, other kinds of instruments that will become available over time. But it equally represents a risk to input costs, to, other inflationary pressures, which obviously are linked to carbon. So it kind of forms a bit of a virtuous circle. And I think, like it or not, we're all going to have to really kind of get our heads around the challenge at hand, which is going from, call it somewhere between 40 and 50 gigatons, wherever we end up peaking, to very close to zero in the next 30 years. It's essentially building a reverse oil market. We've got to put a whole lot of carbon back into the ground. Agriculture can obviously has a major role to play in contributing to that. By providing solutions. But if you do have runaway carbon costs because we don't get abatement and we don't actually get behavior changing, then it's going to massively increase the cost of doing business for fuel, on fertilizers, for land, for everything. So I think the quicker we can get smart about really kind of knowing our own carbon balance, understanding what technologies are available to us, to our suppliers, and what options we've got to both be defensive and offensive, the faster we can kind of elevate our kind of collective consciousness on this topic, because, it really is going to take a village to get us anywhere near these targets. But I would say I've never been as optimistic as I am today. Large part is companies like Agoro popping up and, having a meaningful impact and just being welcomed, in a lot of communities with open arms. And, and a lot of the feedback we're getting from our partners and our customers about the real desire to put money to work, to take risk, to try new things. It really is a different market today than it was 5 years ago, is what I'm going to say.
That's great. If there's someone listening to this episode and they're interested from a business standpoint of lowering their carbon footprint, how would they get in touch with Hartree and start along that journey?
Yeah, good question. I mean, we've got a website that outlines, everything that we do. It's vertree.earth. It's vertree.earth. And you can see there the different kind of services that we provide, and you've got a contact section, so you can just go online, drop us a note, whatever you want to talk about. We'll make time to respond and and have a conversation. But really appreciate you inviting me on today, and very happy for all of the progress and successes that you guys have had at Agoro.
Thank you very much, Ariel. This has really been fascinating to learn. It's really interesting to know where these carbon credits or offsets go and how they can help businesses reach their sustainability goals, and more importantly, help our climate and our environment. So thank you for being part of that and helping us understand about that. If you have questions, you can go to agorocarbonalliance.com or our toll-free number. If you look in the show notes, you can see both of those links. Thank you very much, Ariel.
My pleasure. Thank you.
You've been listening to the Agoro Carbon Farming Podcast, where we bring you knowledge on how to sustainably and profitably transform farming through carbon cropping. To learn more about how you can become a partner, visit us at agorocarbonalliance.com or follow us on our many social media channels: Facebook, Instagram, Twitter, YouTube, and LinkedIn.